Inventory gains, of course, nobody can predict about inventory gains, and if the prices do remain at the same level, then probably inventory gains will not be of the same level, because this particular quarter we experienced significant increase in terms of the crude price, or similarly in the product prices also. If we look at the quarter one of 18-19, the average crude price for Indian basket was $72.80. And the same basket was $49.9 per barrel 1 year ago. So we have seen significant change in terms of the crude and the product prices, which resulted in inventory gain this quarter. And if I'm sure that neither we want nor it's likely that we'll have a similar kind of growth in the coming months, then probably the inventory gain should not be of the same order. In terms of GRM, because inventory gain in profitability, inventory gain is only a part of it. The rest of the physical performance of the corporation during the first quarter was outstanding. When we talk about the refineries' performance, in terms of capacity utilization, it was higher than the previous year. This year it was at 102.4%. The distillate yields were more than 80%, which was higher than the last year. The fuel and loss was 0.4% lower this year, which was much better than the last year's performance. So in terms of physical performance, we had been doing good. We are doing better than all previous quarters. So I'm sure even if the crude prices remain at the same level, or the product prices remain in the similar range, and when the inventory gains would not be there in the future, but we'll be able to build on the profitability because of the good performance, physical performance.
But so this is also an election year, so there's a fear in the investor community that oil marketing companies will not be able to control, price petrol and diesel in tandem with market prices, something we've seen even before Karnataka elections. Could you talk to our viewers about how real is that fear, and of course, if that is a problem, they are also afraid that it will affect the bottom line as well?
I'm sure that the customers and the consumers, they have seen how the prices have behaved in the past, particularly when the crude was touching $80. We were able to pass on the prices. There are times when we strongly believe that probably the spikes are very temporary. Even before the Iran sanctions, the price rise were happening in the crude because of various anticipations. But whenever we feel that the price spikes are probably temporary, we try to moderate the prices to a certain extent. But I can reassure everyone that if the prices are either going up or going down, they are duly passed on to the customers. And as we all know that today the retail prices are changed on daily basis, which is worked out based on the last 15 days average prices in the global market. So our industry, our market today is floating absolutely in tandem with the global market.